Hey there, Tom Davies at Fairway Mortgage in Edmond, Oklahoma. Today we're going to talk about the qualification process. Now there are 4 good reasons to get pre-qualified. Number 1, your realtor, the buying agent, is going to want to know that you're pre-qualified before he or she shows you a whole bunch of homes. Number 2, the listing agent, the one who's listing the home that you're going to make an offer on, is going to want to know that you're pre-qualified before he or she entertains an offer. Number 3, it's always a good idea to come to lenders and check your income. We may count it differently than you do. Your credit, unless you're checking your credit all the time, there may be something that snuck up on you, and our scores can be different than the ones you see online. And your assets, we're going to want to understand where they came from and how long they've been around. We may count your assets differently than you do. And then number 4, time is of the essence. When you're making an offer, it helps to have a good, strong pre-qualification letter from a good lender like Fairway Mortgage at the time of offer, especially in a multiple offer situation. That can make the difference between getting the house and not getting the house. So what do we ask you when we're doing a pre-qualification? Well, we need to fill out a loan application. And there's going to be a lot of questions about you: name, address, social security number, date of birth, where you live, where you work. We're going to drill down a little bit further, ask you a lot of questions about how much money you make and how you make that money, how much money you have in the bank and where it came from and how long it's been there. We're going to ask more personal questions about whether you pay child support, have you been bankrupt or foreclosed or charged off. So don't take it personal. We're going to ask you a lot of personal questions. Then we're going to plug everything in, and we're going to ask you to provide some documents that support that. So the number 1 is a pay stub or W-2s to support your income. We may ask you for some tax returns, and depending on what we see, we may ask for bank statements and other additional documents. Now, what qualifies? There's 3 key elements. There's credit, there's the ratios that we pull, and then there's also your assets. So I'll just go through those one by one. So let's look at your credit. When we pull credit, we're going to pull all 3 of the major credit bureaus: Equifax, TransUnion, and Experian. We're going to use a model called FICO, which stands for Fair Isaac Corporation, and we use the FICO model that's several years old. Now I say that because the FICO model that we use might produce a different score than what you're seeing if you go online and you're using something other than FICO, which most online vendors use. So sometimes the scores we have are similar to the scores you're seeing online. Sometimes they're lower, sometimes they're a whole lot lower. So just keep that in mind. We're looking for a credit score in the 600s. Most loans take something higher than that, but we can go down to 600. We have one loan, the Veterans Administration or VA loan, that actually goes down to 580. Then we're going to look at ratios. And when I say ratios, I mean the magical debt to income ratio. And that's some pretty simple math. It's just your debt divided by your income. So in our little scenario here, I have a home loan of $1,200. I have a car loan of $450, a student loan of $150. This borrower makes $4,000 a month, and I divide those 2 and I get 45%. Now 45% is a pretty good number. Some loans need a little bit lower than that. We have a few loans that will go all the way up into the 50s, but 45, something in the 40s and below, is generally what we're looking for on the debt to income ratio. Then we're going to look at income. And when I say income, I mean your gross income. So we're not looking at income after taxes. We're looking at before taxes and before 401k deduction and any other deduction that you have coming out of your paycheck. Now, any income that's out of your base pay, your base hourly, your base salary, in other words, commissions or bonuses or overtime or a second job, or if you're a nurse, a shift differential, any of that kind of income, we're going to need to see some history. Hopefully we can get 2 years of history and we average that out, and that's what we add on to your base income. Debt. Now when we're looking at debt, we're looking at the minimum payment on loans you make. So we're not looking at things like groceries or cable bills or cell phone bills. We're looking at the minimum payments on the loans you have. So car loans, student loans, home loans, signature loans, any other credit card, minimum payments on credit cards. That's what we consider your debt. Now, if you're self-employed, it's a little bit different animal. We're going to look at 2 years of federal tax returns. If you have a separate business return, we're going to want to see those too. We're going to plug those into a spreadsheet, and it's going to be your gross income less expenses. We can add some things back like depreciation. We're going to subtract some other things more than you do on your tax return, and we come up with a final number of what we consider your income. So then we put it all together. We take your debt and your income, and that creates a ratio for us. We take your credit and then we look at your assets and we plug it all into our software and we submit online with a company, you've probably heard their names, Fannie Mae and Freddie Mac. And those two organizations will come back and tell us if you're approved or accepted. And once that happens, then we submit the pre-qualification letter to your realtor. Now, some people get a little nervous about doing this, about coming to a lender. And what I tell people is that everyone is going to be qualified. They're either qualified today, and if so, I'll tell you how much you're qualified for, or I can help build a plan and you will be qualified at some future date. So thanks for tuning into my video, and check out my other ones. Have a great day. Thanks.